We often spend a lot of time here talking about the tactical situation in the Russia-Ukraine war, or in Venezuela, or in the Middle East, about who's doing what this battalion's doing, what the opportunity for firepower and air defense, and all those kinds of things, as how it affects the actual movement of a battle and how the war may end up. Those are all important things, obviously. But there are some issues that really transcend the battlefield completely that have profound impacts on the battlefield, and that is in the financial sector. If you can't support a war and sustain anything, it doesn't matter how good your tanks, planes, or troops may be, you're not going to be able to win the war, especially if the other side can sustain itself economically. That has a lot of ramifications for what's going on in the Russia-Ukraine war, and more so than many people may believe. And our guest today is going to help us understand exactly what may be going on in Britain. And Alasdair Macleod, proprietor of MacleodFinance.com, is with us today, and he is definitely somebody who's very closely wired in with what's going on in the British economy and how it may affect their ability to sustain the war in Ukraine. Welcome to the show, Alasdair. Pleasure to have you on.
That's my pleasure, Colonel.
Well, listen, let's just jump right into it because, let's start off focusing on your country here, because the kind of the impression that a lot of people in the West have, at least in the United States, is that, UK is this stalwart, very solidly foundation country that really can just kind of do whatever it wants to with its finances. Sure, they got some problems here and there, but there's no reason to think they won't be able to just go on as they have into the indefinite future. So all these plans can be made and all these promises to Kiev can be made, and they'll meet them all. But as you've said in some recent work just earlier this summer, the Britain may not be as sound financially as many think.
Well, I think that's right. I mean, probably one way to look at it is that Britain sort of pretends to be a bull mastiff, but actually it's a chihuahua. I mean, it really is in trouble. The reason that the budget has been delayed is basically because the news is so bad that the Chancellor can't actually come up with a tax policy which isn't going to destroy the economy even more and get the agreement from her backbenchers. And this is a background for defense spending. I mean, I don't think it makes us a very reliable NATO partner, frankly.
Well, and I wanted to kind of play something from your Prime Minister, Keir Starmer, who, on the one hand, we on this soundbite here, this is from this past March, by the way, will acknowledge that financial security is national security. That's something that we say in the United States a lot, and I think is something that's self-evidently true. If you can't maintain your finances, you can't do the national security part either because of the obvious expenses. But then when you get into how this money is being spent, what the plans are, we seem to have a bit of a disconnect here. Now, for context, this is, I believe it was on March the 3rd, which is right after that big explosion in the Oval Office between Zelensky and Trump, where they had that big argument in front of everybody, and he literally left tail between his legs to 10 Downing, where he was greeted a little differently.
Mr. Speaker, it begins in this House, where on Tuesday I announced the biggest sustained increase in defence spending since the Cold War. Yeah. A recognition of the fact that once again we live in an era where peace in Europe depends upon strength and deterrence, but also a rediscovery of the old post-war argument, long held on these benches, that economic security is national security. Mr. Speaker, I now turn to the events of this weekend and the moving scenes that greeted President Zelensky as he arrived in London on Saturday. Yeah. Mr. Speaker, I saw for myself he was taken aback when the crowd in Whitehall cheered at the top of their voices, and they were speaking for the whole of our country. Yeah. A reminder that this government, this House, and this nation stand in unwavering support behind him and the people of Ukraine.
So you seem to have some emotion, and then there's some fiscal realities. Can Britain both spend enough money domestically for 5% of GDP here in just the next few years and support Ukraine indefinitely?
I think it's going to be very difficult, quite frankly, because if you're going to spend that sort of money, then you've got to raise the taxes in order to do it. I mean, our treasury is pretty unimaginative. I mean, they're rather like accountants trying to sort of balance the budget. And if you're going to go and spend a lot more on defense procurement, then my goodness, it's got to come out of taxes somewhere or out of cuts in spending elsewhere. But the Labour Party have demonstrated, I'm talking about the parliamentary Labour Party, have demonstrated a huge reluctance to take any cuts in ministerial spending elsewhere. I mean, they tried to get through some fairly minor adjustments on welfare spending, and it was thrown out. The government was defeated by its own backbenchers. I mean, this is a situation which I think is unsustainable already without the extra 5% defence spending. So how they're going to get this through, I really don't know. And we look forward to the budget for some detail on this, because quite frankly, I think that these guys I just can't understand how they think they're going to afford it. And the idea that, the public are way behind they're backing up the government and all the rest of it on their defense spending, I don't think that's the case at all. I mean, I think that's just sort of political bluster. Situation, I think, as far as NATO is concerned, is do not rely on the UK to be a reliable partner. That would be my view.
Now, you have said just a couple of months ago that it's not so much a problem with where the UK wants to spend their money, whether it's national security or direct benefits and aid to Ukraine, but you said it's a revenue problem. What does that mean?
Well, the problem basically is, revenue. They've got to get the revenue in, and the revenue comes in the form of taxes. And if it doesn't come in the form of taxes, it comes in the form of borrowing in the gilt market, which the gilt market is our government bond market. And that is already showing signs of indigestion, certainly in longer maturities. And I can see the long gilt, the 30-year gilt yield, which currently is over 5%, going considerably higher as the mathematics of this spending begin to work through into the markets. At the moment, Colonel, markets are on pause because we're waiting for this budget. There's so much speculation about what they're going to spend, which taxes they're going to raise and all the rest of it, and how can they do it without destroying the economy. And the defense spending issue has actually disappeared completely from the headlines. But it is very, very important. If we're going to deliver on that 5%, then cuts have got to come from elsewhere. And there is no ministry in the government prepared to make the sacrifice for that to happen. Now, you could argue that the Treasury will force ministries to take cuts. But the problem there is that ministries are already trying to do too much with too much bureaucracy. They are inefficient. And there's absolutely no sign of trying to make them more efficient. Because if you make bureaucracy more efficient, effectively, you put people out of work. And that's anathema to this current government. They are in a fix. And I just can't see how they're going to raise the 5%. I mean, admittedly, it's the sort of target which is over time. But these targets over time are fine until the time actually arrives. And I don't think it's going to be terribly long before this one arrives. But
I've been to the UK a couple of times in the past 12 months, and both times I was struck by some of the comments from some of the folks in London who were complaining about they're aggravated at the government because it was spending so much money on not just welfare, but on immigration and taking care of folks that are coming in. And they're saying, wait a minute, you're cutting already, and correct me if I'm wrong here, but the government was already cutting services for its population. At the same time, it was trying to give money to immigrants or people who were looking for asylum, et cetera. And so they're already unhappy about these cuts. But if I understand what you're saying, for the government to reach its 5% goal and this foreign money goal, they're going to have to either cut something more or they're going to have to raise taxes on everybody. Is that the bottom line?
That's the bottom line. Absolutely. And, the reason that the budget, in fact, is meant to be an autumn statement. The budget is meant to happen early next year. But the reason the autumn statement has been delayed is that this was meant to come out at the end of September, please note. The reason it's been delayed is because the debate within the Treasury is so intense, they can't actually work out how to square the circle, how to make the books balance with all these commitments. And the denial within cabinet from the spending ministries. They're saying, look, we're not taking these cuts. It's turning out. I think this is why it's taken so long. And with markets and with economies in a pretty febrile state, I don't think that between now and the end of this month, when the autumn statement is due, that things are going to get any better. They could actually become somewhat worse. This is it's not a good position to be in for the government.
And what is the mood of the population towards any of the potential proposed cuts? If they're already unhappy with the cuts that have been made here, what is the concern that the population may do and presumably vote them out, I guess, if there's more cuts that are asked on top of that?
Well, they're in office for another 4 years, basically. So, short of a real disaster occurring, and by disaster I mean a real economic disaster, forcing a change of government, then we've got to assume that they're going to be there for the next 4 years. I think, the public mood is very, very anti the current government. I mean, if you look at the opinion polls, they are, they've never been so low. I mean, almost never has a government in power had such poor polling results. The only thing that really helps them is that the Conservatives equally, are blamed for the mess that this country is in. And indeed, they were in power, for 14 years before the Labour Party got in and failed to correct the things that should have been corrected. And this has led to a vacuum, which, of course, reform under Nigel Farage is filling. And but of course, when an election comes, it's not necessarily going to be a straightforward, Farage is going to walk it sort of thing, because we have a bicameral parliament, which basically means you're either the government or you're in opposition. We don't get coalitions very often. So this is a if you like, a political situation which is working very, very much against the government. They haven't got a hope of getting themselves re-elected on the current situation. And as I said earlier, the fact that the government are not getting the support from their MPs, their parliamentary party, to make the necessary welfare cuts and spending cuts, it's a situation which is so reminiscent of when we had to call in the IMF back in 1976. This time, the problem is too big for the IMF to handle. I mean, the numbers are off the scale. So
it appears to me if you have political challenges, either raising taxes or in making cuts, then that leaves in my view, and correct me if I'm wrong, that's one of the reasons we're glad to have you on, one of two other options. And one is to just borrow money. Let's look at that one first. What happens if Britain just says, we're going to follow the U.S. lead here and we'll just keep adding to our national debt and we'll figure it out later?
Well, the markets will just say, well, this is print. That doesn't do anyone any good at all. The purchasing power of the sterling will go down. I'm already pretty certain that the purchasing power of the dollar is going to fall substantially over 2026 and 2027. And with the dollar as being the king rat of currencies, to which all the other fiat currencies refer, sterling, I think, is very, very vulnerable under these circumstances. It's got to get its books straight. Otherwise, it's going to be a very, very weak currency, even relative to a weakening dollar. And I think the proof of what's going on is what's been happening with the gold price. The gold price, and remember, gold, if you like, is legal money without counterparty settlement. Basically, if gold is going up like this and sustaining these far higher levels, it's sending a signal that there's a problem for fiat currencies. And if there's a problem for fiat currencies, particularly the dollar, then it's certainly there in spades as far as sterling is concerned. And I think I would say that the purchasing power of sterling in the coming 2 years, I think, is going to fall very significantly. And what that means for bond yields is that they will rise very significantly. So the idea that you can rescue the situation by, borrowing yet more, I mean, forget it, because the cost of borrowing is going to escalate, just as it did in 1976 when we had gilts yielding 16%. I mean, can you imagine that, what that would do to government finances today? This is not a very happy situation. And I think it's also going to impact on sterling. And getting back to your basic point about our relationship with other European countries in NATO, I think it emasculates us. I really do.
And let's look at the near term. That politics is famous for, we'll figure out the consequences later. Let's just get something, that can help me in the near term. Is there a risk that the government can say, all right, I can't raise taxes, I can't cut spending because the people are already too unhappy, so I'm going to go ahead and borrow at least for a period of time that will allow me to keep going and maybe buy me another 6 months, 12 months, something like that? Is there a risk that could happen? And would that even work for the near term?
Well, I don't actually think it would work. Whether they would try it, I know that the Treasury is trying very, very hard to stop the Chancellor from borrowing. And, she's on message publicly anyway. The other thing which we don't know is that HMRC, the revenue side, is actually a subsidiary of the Treasury. Now, I think that the message is coming through in terms of tax collection and all the rest.
And I'm sorry, for our audience here in the U.S. who doesn't know, what is HMRC?
Her Majesty's Revenue and Customs.
Got it. Okay.
Sorry, I should explain that. They, if you like, collect all the taxes and tariffs and all the rest of it. Now, I am convinced. We'll see when the numbers actually come out in the budget. But I am convinced that the returns, the tax returns, the collection of taxes is being really rather disappointing, which would indicate that the economy is doing less well than most people think. It also indicates that the budget deficit is going to be significantly higher than a lot of people thought, certainly a few months ago, and they've been revising the numbers upwards, but I don't think they've got there yet. And I think this explains why they've had to sort of put off the autumn statement until the end of this month. This, I think, even without all the excess defense spending, I think is creating a real problem for the current government. How are they going to resolve it? I really don't know. And the point about borrowing, Colonel, if I may just say, the point about borrowing is that if they start borrowing significantly greater numbers at this juncture, then they're going to destroy sterling. They're going to push up bond yields to really into debt trap territory. This is a doom loop. Potentially it really is. And I think it's a lot more dangerous than most people think.
Well, that's actually where I was going to go next, because if you can't say, all right, we're going to cut services, cut spending, and you can't raise taxes and you can't borrow, then as far as I can see, that only leaves one other option. You don't spend 5% of GDP on defense. You don't send all this money to Ukraine. You have to start scaling it back. Is there another option?
No, I don't think there is another option. I think you're absolutely right. And of course, this 5%, of course, this is something which isn't going to be in this fiscal year. It's going to be, between now and I suppose 2030 or something. You put it off. I think we're going to see a bit of that sort of going on. But no, they just can't meet it. The problem in terms of tax levels is that already people are losing confidence in this government. We've got a situation where the top 1% of earners in this country pay 30% of the income tax. And they're just saying, sorry, we don't like this. You're robbing us. We're going. They're doing away with things like inheritance tax on farmland. They're making it, they're trying to shut down public schools in the UK being, if you like, private schools. I know, but you can see that they're doing all the wrong things to appease the far, far left-wing elements within the party. They're pursuing, net zero environmental causes, in a way which is just completely destructive of economic activity. They are destroying the country with their current policies. And unless they turn that aspect around as well, we just haven't got a hope. The idea that there's going to be anything left over for defense spending, I think that's for, That's not going to happen. I really can't see it.
So you have said you think that Britain could be heading towards bankruptcy. What would that look like? It is best you can guess in a very volatile situation. So I understand things could change dramatically from, year to year. But say over the next 2 to 5 years, what does that look like in Britain, and what would a collapse even look like in the modern era?
Yeah, I mean, governments don't go bankrupt as such, but what they do is they lose the purchasing power of their currencies, and that's basically what's going to happen. I think the Fed is actually going down the same route. Please bear in mind that we are in the largest credit bubble in history. And if you don't appreciate the credit bubble side, just look at the debt, because debt equals credit. They're two sides of the same coin. We know what the debt situation is and how bad that is and how it is deteriorating even more. But the other side of that, of course, is credit. And credit has been angled at puffing up financial assets, particularly in America. And that's also affected us in the UK. Consequently, when that bubble bursts, we've got a 1929 situation, on top of which, of course, we've got President Trump's tariffs, which are rather like the Smoot-Hawley Tariff Act back in 1930. We really do have that problem. Now, in 1930, the US was on a gold standard, and basically businesses and banks went bust. This time, not on a gold standard.
No.
And the governments have a responsibility towards their economies to rescue everything, certainly rescue the banking sector, and rescue a lot of the zombie companies, the companies overloaded with unproductive debt. So how do they do that? Well, they print. And we've seen the Fed starting to abandon the inflation mandate and moving towards ensuring there's liquidity in markets, which, if they didn't do that, everything would start falling over. So you can see that this is already happening in America. And if it's happening in America, I mean, the old phrase is, if the dollar catches a cold, we catch pneumonia. How can we do the spending? How can we, the whole idea of NATO getting together and, with or without the Americans, helping Ukraine, stopping the Russians, whatever. These guys are living in cloud cuckoo land. That's the only thing I can say.
You mentioned the U.S. Now, I have heard it said, and I'm really eager to have your view on this as a financial expert, is that the mechanisms that we had in the Fed in the 2008 housing collapse with quantitative easing and all that no longer exist. We don't have that flexibility to do that in the event that we get into a similar situation right now. How do you see that?
Well, I think I would agree with that, but that's actually quite a complex argument. But one thing I would point out is that episode, if you like, was very much, if you like, the template for dealing with the next situation, the next credit crunch. Basically, what the Fed did was it wrote an open check. You need funds, we will provide it. And they rescued the whole system with an open check. I reckoned at the time you were looking like an ultimate potential liability of around about $13 to $14 trillion. Now, we've moved on from then. What would it be now? You can see how, particularly with gold rising, particularly with central banks around the world trying to get out of fiat currencies, which is why they're buying gold. You can see that the consequences on the purchasing power of a currency like the dollar under those circumstances is going to decline very, very substantially and probably very, very quickly. So, this is going to be a very strange one. I really do think that there is nothing to stop the dollar falling and falling and falling in terms of its purchasing power, which will be translated in inflation rising to the point where it potentially becomes hyperinflation. So,
and what time frame are we talking here? We talking like 6 months, 6 years? How do you see that?
Well, broadly, it's almost impossible to put a timescale on these things, but I'm looking a couple of years ahead, 1 or 2 years ahead, if you like. I think the first thing, Colonel, is that when you see the credit bubble popping, what will happen is that all those wonderful stocks on Wall Street that have made everybody so much money will start tanking. And when they start tanking, what happens is that the banks will start foreclosing on on their margin loans. And the margin loans, incidentally, around about $1.2 trillion, up from around about $250 to $300 billion at the time of the Great Financial Crisis. This is a highly leveraged market, and the banks are going to run for cover. The amount of stock which is bought under these leverage loans is probably in the order of over 3 trillion. So this is not a minor thing. And the other thing to bear in mind is that foreigners are very heavily invested in US dollar financial markets. I think on the Treasury tick figures, you're now looking at around about 20 trillion of foreign investment in US equities. And we know what happens when the bubble pops. You just take your money home, or you try to, you get out. I mean, that is going to accelerate the decline when it happens.
Now, I'd like to ask your opinion on something in terms of what this means. You've mentioned gold a couple of times, and I've noticed here, and you can kind of see on this chart, this is a 5-year chart here. It kind of was pretty good, going on stable for last 3. And then toward the end, or I guess the middle of 2023, it started going up. And now that we've got a pretty big spike here, what does that tell you? And why is gold suddenly going up so much when it was pretty much basic for a number of years?
Well, they're two things, and they are very much connected. The central banks and the central bankers know what they're doing. I mean, we may slag them off, but around the world, they've got a very good grasp of risk, if you like, currency risk. They are getting out of fiat currencies and going into gold. That is called rebalancing your reserves, if you like. So that's the first thing. The second thing is the geopolitical scene between China and Russia on the one hand, and America on the other. China and Russia have really put together, if you like, a market for themselves of around about 70% of the global population in the Shanghai Cooperation Organization and also BRICS. And they are intent in doing away with the dollar as the trade settlement currency in that area. Now, they can't do away with it entirely, but one thing that is now happening is that they're forming trade blocks, great free trade areas like the ASEAN one, which predominantly is China and Southeast Asia. And they're also getting very, very close to a free trade agreement between China, Korea, and Japan. And so, the world is moving away from using the dollar. And in order to cement this, I mean, there's a lot of talk about them using their own currencies and all the rest of it. But the way this is going is that the yuan will be the replacement for the dollar. And already they're building, the Shanghai Gold Exchange is building a new vault in Hong Kong, also one in Saudi Arabia being a major trade partner. And there are various facilities being made available throughout Southeast Asia to the ASEAN members who want to settle their trade difference in a gold-backed yuan. That is where that is going. And that's going to kill the dollar. And I really can't see that intellectually or politically, America and the rest of us have any response to this, because we dismissed gold 54 years ago. And the propaganda coming out of America has been the dollar has replaced gold. Gold is a pet rock. Forget it. But no, it's not. It's in everybody's common law as final settlement and the stability over long periods of time in terms of purchasing power. What we're seeing, if you like, is not so much gold rising as the other side of the coin, the dollar falling. And I think that's the key thing to understand. I really do. If you understand that, you've got a grasp of what's actually happening. If you don't understand it, then I'm afraid you've got to go back to school and look at the legal difference between, I think it was John Pierpont Morgan who said that gold is money, all else is credit. And that was in 1912. Still true today.
So let's expand the lens out a little bit. So we've been looking at the UK and then at kind of the US, but let's expand out into Europe here, because if the dollar it starts to weaken, as you say. I think you already said earlier in this episode that will have a downward and negative impact on the sterling itself. What does that do to the rest of the economic situation and the systems in Europe, Western Europe?
Yeah, well, we're in a dollar-based fiat currency system. So if dollar, which I think is the king rat, if you like, of currencies, if that begins to fail, then it's going to just take the other currencies down with it. I think that the euro is in actually a very difficult position because you've got a number of G7 countries which are over-leveraged in terms of their government balance sheets. France in particular, I can see Spain as well. Germany is in a frightful mess. It really is. It's been killing its underlying economy. Admittedly, it's got a debt to GDP number of around about 60-65%, so it's better than most of us, but it's deteriorating quite rapidly. The idea that politically they can continue on the course they are without keeping out, and keep out the AfD, I think that's very questionable. I really do think that the sort of social democratic model, European model, I think is coming under great strain. And the only place really where we're seeing stability is in relatively marginal countries like Hungary, which, I mean, under Orban has been absolutely amazing. I mean, they have done the right things all the way along. And now we've got Italy beginning to do it. But the rest of Europe is in trouble. And this is going to be reflected, I think, in a growing sense of insecurity about the future of the euro itself. It is different from sterling, from dollar and all the rest of it, because the euro's only existed since the turn of this century. Other currencies have existed a lot longer. They've got a longer track record. So inherently, they are more stable in a crisis. The euro is yet really to be tested. But I think when it is tested, it will be found wanting. And then, of course, all these wonderful ambitions about supporting the Ukrainians and all the rest of it, all the NATO ambitions that, Europe has now got to look after itself. Okay, we end up buying American weapons and all the rest of it. But, that's going to come to naught. I think it is, we need the economic growth, if you like, in order to support the defense spending. And I just don't see it anywhere in Europe.
Right. So then let's take now look at the next couple of years. If your projections are correct, and there will be a significant risk of economic downturn in that period affecting the United States, the UK, and the Eurozone itself, what is that going to do to these ideas that we're going to keep on spending and keep escalating the defense spending up to 2030 by 5% and keep on just into perpetuity, sending all this ammunition, weapons, money, and everything else into Ukraine? Can those things coexist in that 2-year period?
I don't think they can, because the sums just don't add up. And I suspect also that the support, if you like, from the electorate is not going to be there for it, because it's not going to be, it's not going to come out of taxation beyond a certain point. And I think we're probably already there. I suspect also that on the battlefield, Russia is actually winning against Ukraine, and there is not a lot of time to rescue the Ukrainians. I really think that Russia could actually finish this, perhaps by the first half of next year. The territory is absolutely enormous, which does stretch things militarily. But the Russians, I think, could have this one wrapped up before the Europeans even get their act together. And I think that's the danger for the Brussels overall defense policy.
Wouldn't it, or might it not be in the interest of Western Europe and the Western world writ large, add the United States into that, to say, instead of trying to drain our treasuries and to expand our expenses elsewhere on a war that could be politically and diplomatically ended and brought to a close, so that we don't have the need to ramp up this, and instead you can just maintain what you have and maybe even improve things around the edge, but you don't have to have this, in some cases, more than doubling of defense spending, something that produces no economic productivity at all for a country, and instead reinvest that elsewhere in their country and be more stable and then hence more secure.
Well, that's more sensible. And I think also I mean, the trouble is that these governments in Europe they believe their own propaganda. I mean, when this all started off, we understood that Russia actually just wanted to protect her borders. And I think it was Secretary Baker, who, after the Berlin Wall fell, reassured the Russians, look, we're not going to move one step east. We will, now that we're welcoming you into the capitalist fold, the Cold War is over. But of course, since then, the deep state, if I can call it that, in America has just pushed and pushed and pushed. People like Victoria Nuland, all the rest of it. And I'm beginning to think that President Trump is now totally under the thumb of the deep state. I mean, the way he's behaving on the defense side really tells me that he hasn't actually got his own coherent policy. I think he's being steered from within the deep state, people like Marco Rubio, perhaps. So, in a sense, the hope that we could sort of apply common sense to this, as you're suggesting, I think is probably it's a hard vision to
okay,
really.
So what about this? What about, because right now for this, what's many people say is the deep state, et cetera, is the defense industrial base, because they're doing wonderfully. They're really happy with things are going. They'd love to have all this increase in spending because it really helps their industry. But they're not the only industry that makes financial decisions in the Western world. And do you see any chance that at some point the majority of these other industries and these other industry giants who don't want to see their earnings eroded may end up pushing back and say, this is not sustainable for us. And instead of letting that relatively smaller industry, the defense industrial base, kind of rule the roost here, because they're going to go down with it if things go in the direction that you suggest they might.
Yeah, I don't think that's quite how it works. I think what the other industries will do is they will look at their share prices, and when the credit bubble bursts, and they always do burst, they will see their share prices falling, and then, of course, all the commentary will come out of this sector, that sector, about what's going wrong and where the government is doing things incorrectly and how they're apportioning too much money to defense, or whatever the story is. I think it's at that stage that you're going to get real trouble, if you like, from industrial sectors, other industrial sectors. I don't see them attacking it at the moment, defense spending at the moment, because it's not really badly affecting the other sectors. I mean, a lot of the sectors are sort of, suppliers to the defense sector as well. So, So
that's where it is right now. But in the event that in this next, say, 24-month period, you project it could be, if that starts wobbling and those per share prices do start going down, and then the inflation does start going up, et cetera, then that changes the pressure that doesn't exist right now. Is that accurate?
Yeah, that's absolutely right. I think the pressures ahead, people just don't understand what the dangers are. I mean, we all know that something like, there's a 60% probability that the Fed will cut interest rates again in December. I mean, or later on this month, whenever. I mean, another cut by the year end. But I mean, if you look at the inflation mandate, I mean, inflation is already running well above the 2% level, if you like, measured by the CPI. And not only that, but you see bond yields, they're edging up again. And the fact of the matter is that bond yields will rise, reflecting risk of loss of purchasing power of these fiat currencies. What's going to happen is that in 2026, you're going to begin to see a commodity-led inflation really beginning to take off. Already, I mean, on my analysis, when I look at base metals, they are cheaper than they have ever been in real terms since about the year 1900 as a basket. You look at food prices, we're getting a similar story there. These prices are going to go a lot higher in 2026. So how can you have lower interest rates at this stage? How can you secure government finances when your bond yields start rising? I mean, you just look at a chart of the interest costs that the government faces. It's a vertical. It's just shooting up. It's just really quite something. I mean, it's sort of almost more than defense spending now. I mean, this is a major cost, and it's going to become even worse. Where do these guys go? The only way they can stop the slide is actually to go back to a gold standard. And I just cannot see how they're going to do that. They haven't got the temperament. The economists or macroeconomists who don't understand money and credit, as expressed by John Pierpont Morgan, as I made the point earlier. So this is going to be a very, very rough time. And defense spending, I don't know how they're going to do it. America works, I think, on the basis that Europe can take over the defense spending initiative. They will buy American arms, which is great for American business. And, good luck to them. I think that's basically Trump's sort of thought on the whole thing. If I pull out of NATO or spending in NATO, get everybody else to do the spending, then our defense industries will do extremely well. Thank you very much. And I think
that's good for us. But why would Europe want to get in that calculation?
I agree with you entirely. But I mean, they're so bought into their own propaganda. I mean, it's ridiculous. They really do think that the Russians are out to take over Europe or something. If you don't stop them in Ukraine, that before long, Poland will be taken back. And these guys are sort of, I don't know, they're making themselves scared, I think. And it's just completely unrealistic.
Yeah, I do see a lot of that. Listen, in the remainder of time I have here, let's look at the other half of this equation. We look at the Western European, the United States, UK, et cetera. But economies are a global economy, and that one affects a lot of others. What about the Russian side of this, to the extent that you're knowledgeable about their economy? Are they in the similar kind of problem that the West is, or can they maintain their wartime economy, et cetera, and continue to support their effort? Or are they under the same pressures?
Well, they're under slightly different pressures. I think the point about the Russian economy is that it has subsisted. It has managed to finance the war on the back of sales of commodities, and particularly energy. Until this war started, it was the largest energy exporter in the world. I mean, if you include gas as well as oil, it was greater than Saudi Arabia. So that has been a huge, great source of revenue. If you look at the numbers, it's actually quite fascinating because debt to GDP, government debt to GDP, is in the order of about 20%. We're running at 100% plus in the West. They're only 20%, but which is fantastic. Look at income tax. Income tax is a flat rate, 13%. I mean, this is the sort of stuff we would dream of. Now, all this having said, I mean, I think that there is if you like, a sort of. I mean, there's always been a sort of Russian mafia thing. I think the bureaucracy in Russia is absolutely terrible, but you could probably do pretty well as a businessman in Russia, as long as you kept out of politics, and as long as you sort of kept on a pretty even keel locally, if you like, with the local mafia and so on and so forth. That said, I think that the pressure on oil sales and all the rest of it is likely to slow that down a bit. I would see the Russian economy running into a little bit of trouble. I mean, one of the things that sustained it, Colonel, is that while they've had an inflation rate running at 8, 9, 10%, wages have been going up like 25, 30% for most workers. I mean, and they've been saving, they've been saving some of the difference. So they've actually done pretty well. And if you look at prices in the supermarkets and the availability of stuff, if you like, sort of consumer goods and so on, and food, it's been pretty good. It really has. And of course, by sanctioning Russia, we've made them self-sufficient. Which is always the mistake with sanctions. They actually backfire in that way. So part of the problem we have, I think, looking at the Russian economy is that, again, we look at it from a very jaundiced point of view. We assume that the Russians are in deep, deep, deep trouble.
Yeah, we hear that all the time.
We get it wrong.
As a matter of fact, that's what Zelensky and the European Commission are saying right now. We're getting the 20th package of sanctions together on top of the other 19, plus the one that the U.S. just did. And they say this one is finally going to collapse the Russian economy. What do you say?
No. I mean, look, Russia has a fantastic ally in China. It's got the Shanghai Cooperation Organization. It's got all the BRICS nations on side. I mean, we're okay. In us Europeans and Americans, we've got our battle with Russia, and we've convinced ourselves that they're evil and all the rest of it, which they probably are. But we'll pass over that one. But the rest of the world is looking at this and thinking, yeah, actually, these Europeans and the Americans are the evil ones because how often have we seen regime change in our nation perpetuated by the Americans? How often have we seen the Europeans bribing our politicians to stay politically on side? Yet, when we do a deal with China or with Russia, it's mainly China, they come along and they say, we will go on a joint venture. And okay, we will bring in our experts and all the rest of it, but your country will profit because your economy is going to really start moving ahead. And the point that everybody misses in all this is that particularly in Africa, these nations have sort of come of age now, and they do realize that the old days, if you like, of graft, and bribery and all the rest of it, are no longer worth pursuing. This is something which just didn't work in the past. It's really kept the countries back. They're now looking at growth of 10% per annum in many cases. And if you put in the communications, like you build a railway from Mombasa all the way into Kinshasa in the Congo, you don't stop at Kampala. This is something else. And not only that, but it's a proper gauge, not the old meter gauge that we put in.
Yeah, I was actually in Kampala not long ago, a few years back, and saw with my own eyes, because I actually drove on one of these roads that they were in the process of constructing, and that's exactly what the local people told me. They said, yeah, the Chinese come in and they don't bother us too much. We don't get to do. They bring in a lot of their experts, as you said, but they don't bother us. They don't say you have to do this or that or the other. They just say, hey, this just come in. Here's the contract, and let's move on. And we benefit. And he said, here's this huge road out in the middle of nowhere that made it a lot easier to get through.
Well, it does. And of course, the whole point about driving this road through Uganda into the Congo is, you've got cobalt, and you've got all the other wonderful stuff, and copper and so on, that's going to come out of there and be shipped to Mombasa and then off to China. I mean, they're doing this all over Asia. I mean, this is a new world, and we're not part of it, and we're cutting ourselves off from it. I mean, how stupid can we be? This is just extraordinary. We just don't accept that the world has moved on. And we comfort ourselves by saying, well, the Chinese are brutish. They do awful things to the Uyghurs, and there's no freedom and all the rest of it. But I tell you, as a European, I'd be more frightened, if you like, of my own government than I ever would be of the Chinese government. When my government takes away my freedom, I think that's far more important than, let us say, a Huawei telephone, which I may or may not own, sending information back to Beijing, allegedly.
Right. Well, listen, we really appreciate you coming on today. And one of the hallmarks of our channel here is that we are unintimidated and uncompromised to bring people the truth, whatever it is. And sometimes that's not a pleasant thing to hear, but it's something we desperately need to hear. And we are very grateful for you to come in and telling us just kind of, here's how things are and the concerns that we may have, and offering an opportunity. This is how we can avoid some of this stuff, because it's not guaranteed, but we're going to have to make some changes if we want to avoid the worst outcomes.
Yeah, absolutely.
So thank you very much. Really appreciate you guys today, and appreciate you guys today following us. And be sure and like and subscribe if you haven't done that before you leave. And we will all look forward to seeing you on the very next episode of the Daniel Davis Deep Dive.
Thank you very much indeed.